Hello student, today we are going to study the topic of Introduction to Financial Services and Merchant Banking in the subject of Financial Services, MCOM, second year, semester 3. First, Introduction to Financial Services. Financial services is a part of financial system that provides different types of finance through various credit instruments, financial products and services. In services, we have listening, factoring, hire purchases, finance, etc. Thought which various types of asset can be acquired either of ownership or on lease. Next is meaning of financial services. Financial service is a part of financial system that provides different types of finance through various credit instruments, financial product and services like that. In financial instruments, we come across check, bills, notes, debits, instruments, letters of credit, etc. And we come across different types of mutual funds, various types of investment opportunities, and there are also products such as credit cards, debit cards, etc. In services, we have leasing, factoring, hire purchase, finance, etc. Thought which various type of assets can be acquired either the ownership or on lease. There are different type of lease and as well as factoring too. Next, the overview of financial services in India. This is a main part of financial services, this topic. Overview of financial services in India. The term financial service is not defined in a state. Financial services generally services regarded and banking and non-banking finance companies regulated by Bank of India established under the Reserve Bank of India Act 1934 and other entities regulated by the Securities and Exchange Board of India, a body established under the Securities and Exchange Board of India Act 1992. And growth of financial services in India. Next is, what is the growth of financial services in India? India has a financial sector undergoing rapid expansion, both strong growth of existing financial services firm and new entities enter the sector of commercial banks. Next, the growth of financial sector in India at present in nearby 8.5% per year. The growth of rate suggests the growth of the economy and financial policies. The policies are able to sustain a stable growth rate. Next, growth of a capital market in India. The ratio of the transaction was increased with the share ratio and deposit system of a forwarding trading mechanism, the introduction of the National Stock Exchange in order to the various investor locations. Next is growth in the insurance sector in India, in that with the opening of market, foreign and private Indian players are keen untapped market potential into opportunities by providing tailor-made products. The competition among the companies has led to aggressive marketing and techniques. The active part of insurance and development authority, regulatory body has provided to the development of sector. Then next, growth of the venture capital in market. In that, the venture capital sector in India is one of the most active in the financial sector in spite of the external setup, and presently in India there are around 34 national and 2 international SEBI's registered venture capital funds. There are some structure and types of financial services. Now let's see the importance of financial service. It is a present of financial services that enable to country or to improve its economic condition, whereby there is more production in all the sectors lending to economic growth. The benefit of economic growth is reflected on the people in the form of economic prosperity, wherein the individual enjoy higher standards of living. It is here the financial services enable to individual to acquire or obtain various consumers products through higher purchases. In the process, there is a number of financial institutions which also earn profits. The presence of the financial institutions promotes investment, production, savings, etc. When we can bring out the importance of financial services in the following points. First is promoting investment. In that, the presence of financial services create more demand for products, and the producer, in order to meet the demand from the consumers, goes for more investment. At this stage, the financial services comes to the rescue of the investor, such as merchant banker thought the new issue market, enabling the producer to raise capital. The stock market helps in mobilizing more funds by investor. Investments from abroad is attracted. Factoring and leasing companies, both domestic and foreign, enable to producer not only to sell but the products but also to acquire modern machinery technology or the further production. Second importance is promoting savings. Financial services such as mutual funds provide opportunity for different type of saving. In fact, different types of investment options are made available for the convenience of pensioners as well as aged people, so that they can assured of a reasonable return on investment without much risk. The people interested in the growth of their savings, various opportunities are provided. The laws enacted by the government regulate the working of various financial services in such a way that the interest of the public who save through these financial institutions are highly protected. Financial services offered by various financial institutions like that factoring, leasing, forfeiting, hire purchase finance, credit cards, merchant bankings, book building, asset liability management, housing finance, portfolio finance, underwriting, credit rating, interest and credit swap, and mutual funds. Next is minimizing the risk. The risk of both financial services as well as producers are minimized the presence of insurance companies. Various types of risks are covered which not only offer protection for the fluctuating business conditions but also from risks caused by nature climates. Insurance is not only a source of finance but also a source of savings. Besides, minimize the risk. Taking this aspect into account, the government has not only provided the life insurance but also set up a regulatory authority for the insurance companies known as the IRDA 1999 and Developed Authority. Next is maximizing the returns. The presence of financial services enable businessmen to maximize their returns. This is possible due to availability of credit at a reasonable rate. Producers can avail various types of credit facilities for acquiring asset. In certain cases, they can even go for leasing of certain asset of very high value. Factoring companies enable the seller as well as producer to increase their turnover, which also increases the profit. Even under stiff competition, the producers will be in a position to sell their products at a low margin. With higher turnover of stocks, they are able to maximize their return. Next is ensure greater yield. In that, as seen already, there is a suitable difference between return and yield. It is the yield which attracts more producers to enter the market and increases their production to meet the demands of the customers. The financial services able to producer to not only earn more profit but also maximize their wealth. Financial services, their goodwill and induce them to go in for diversification. The stock market and different types of the derivatives market provide opportunities to get a higher yield for an investor. Next is economic growth. The economic growth of all the sectors is essential for a development of an economy. The financial services ensure equal distribution of funds to all three sectors, namely primary, secondary and tertiary, so that activities are spread over in balanced manner in all the three sectors. This brings in a balanced growth of the economy, as a result of which employment opportunities has improved. Next, economic development. Financial services enable to consumer to obtain different type of product and services by which they can improve their standard of living. Purchases of car, houses and other essential as well as luxurious item is made possible through hire purchase, leasing and housing finance companies. Thus, the consumer is to save while he enjoy benefits of asset which he had acquired with the help of financial services. Next is benefit to government. The presence of financial services enable the government to raise both short-term and long-term funds to meet both revenue and capital expenditure. Third, the money market, government raise short-term funds by the issue of treasury bills. These are purchased by commercial banks from out of their depositors' money. In addition to this, the government is able to raise long-term funds by the sale of government securities in the securities market, which form a part of financial market. Even foreign exchange requirements of the government can be met in the foreign exchange market. The most popular benefit for any government is the raising of finance without offering any security. In this way, the financial services are a big boon to the government. Next is expand activities of financial institutions. The presence of financial services enable financial institutes to not only raise finance but also get an opportunity to disburse their funds in the most profitable manner. Mutual funds, factoring, credit cards, hire purchases finance are some of the savings which get financed by financial institutions. The financial institutions are in a position to expand their activities and thus diversify the use of their funds for various activities. These ensure economic dynamism. Next is capital market. One of any economy is the presence of vibrant capital market. It If there is hectic activity in the capital market, then it is an indication of presence of a positive economic condition. The financial service ensure that all companies are able to acquire funds to boost production and reap more profits eventually. In the absence of financial services, there will be a fund which will advisory affect the working of companies and will only result in negative growth of the capital market. When the capital market is more active, funds from foreign countries also flow in. Hence, the change in capital market is mainly due to availability of financial services. Next, promotion of domestic and foreign trade. Financial services ensure promotion of domestic as well as foreign trade. The presence of factoring and forfeiting companies ensure increasing sale of goods in the domestic market and export of goods in the foreign market. Banking and insurance services further contribute the step of such promotional activities. Next is balance regional development. The government monitors the growth of economy and region that remain backward economically are given and monetary benefits through tax and cheaper credit by which more investment is promoted. This generates more production, employment, income and ultimately increases in price. The producer will earn more profit and can expand their activities further. So, the presence of financial services helps backward to develop and catch up with the rest of the country that has developed already. This is the importance of financial services. Next is structure and types of financial services. In that, the term financial services comprise many different things. These are opportunities in financial sector of candidates to find the right fit. From banking to investment, the beyond and option are vast and varied. So, if you are considering a career in financial services, you first need to get an idea of the industry's scope in order to decide which path best suit you and your skill. Hence are the main types of financial services for you to your consider. First is banking. In that, banking includes sending deposits into checking and saving accounts as well as lending money to customers. About 10% of the money deposited into banks must stay on hand as decided by the Federal Deposit Insurance Corporations. Reserve requirement. The other 90% is available for loans. Some of the interest of bank earned from these loans is given to the customers who have deposited money into the bank. Next is advisory. In that, expert advisory services help both people and organization with the various of tasks. Financial advisors can help with you and investments, provides valuation services of businessmen, aid in real estate and more. In which case, advisor help to guide people in the right direction when making financial decisions. Next is wealth management. This type of financial services helps people to save money intelligently and receive a return on their investment when possible. If you have a program that your employer that is one type of wealth manager. Next is mutual fund. Mutual fund institution offer a type of investment that multiple parties in it. These investments are managed by a professional, not the investors themselves. The buy-in for mutual fund is not quite as large as some traditional investment in bonds, the stock market of the like. So they are a popular option for people who are little hesitant with their finance, and investment are also diversified helps with the majestic risk. Next is insurance. Most people have some understanding of insurance. It is a system that you pay into monthly or annually, which act as a safety net but cover cost of some large expenditure which are often unforeseen. There are many kinds of insurance: health insurance, auto, home, returns, and life insurance, just to name a few. If you want to work in this industry, you need to research and understand not only the different kind of financial services but also the different kind of financial services institution. Below are just a few kinds of institution that offer the services. Next is commercial banks. Next is commercial banks. A commercial bank is a type of bank that provides services such as accepting deposits, making business loans, and offering basic investment products that is offered as a business for profit. It can also refer to a bank or division of a large bank which deals with corporations or large middle-sized business to different it from a retail bank and investment banks. Next is insurance companies, investment banks. An investment bank is a financial services company or corporation division that engage in advisory-based financial transaction on behalf of individual, corporations and governments. Traditionally associated with corporate finance, such as a bank might assist in raising financial capital by underwriting or acting as a client's agent in the issues of securities. An investment bank may also assist companies involved in mergers and acquisitions and provide ancillary services such as market making, trading of diversion and equity securities, and FICC services, fixed income instruments and commodities. This is a investment bank. Next is insurance companies. Next brokerage firm. Next planning firm and CPA firm. This is all types of financial services. We just learned in this topic introduction, meaning, overview, growth, structure and types of financial services and importance of financial services. It's very important to you in terms of exam.